In the next 10 minutes, I'm going to show you the 5 biggest mistakes Arizona homeowners are making right now. Mistake number 1, waiting for the perfect rate that may never come. Mistake number 2, thinking you need 20% down to buy a home. Mistake number 3, going to a bank instead of a broker and paying thousands more than you have to. Mistake number 4, getting pre-approved for the maximum and letting the bank decide your budget. And mistake number 5, the one that costs people the most money and almost nobody talks about it. I'm Mike Kenji, your mortgage mentor in Arizona and Indiana. I've been a mortgage broker for 14 years and helped over 1,000 families close on their homes and refinance smarter. And every single week, I see people making these same 5 mistakes. Let us fix that right now. The number 1 mistake I see is homeowners waiting for rates to drop before they can refinance or buy. I understand it. Rates went up, it feels uncomfortable, and everyone is hoping they come back down. But here's the problem with that strategy. Rates are driven by the bond market, inflation data, and Fed decisions. Nobody, not even the Fed, knows exactly when or how much they'll move. What I tell clients is this: the right time to buy or refinance is when the numbers work for your situation, not when the market feels perfect. Because while you're waiting, you're either paying rent that builds someone else's equity, or you're paying a higher mortgage payment than you need to. Every month you wait is money that you're not getting back. The question is not whether rates are perfect. The question is whether the numbers work for you today. And that is a calculation I can run for you in 15 minutes. Mistake number 2 is one of the most persistent myths in real estate. People believe they need 20% down to buy a home. And that belief is keeping a lot of qualified buyers on the sidelines right now. With an FHA loan, you can buy with as little as 3.5% down. Conventional loans go as low as 3% for qualifying buyers. And in some cases, VA and USDA loans allow for 0 down payment. I have worked with clients that have been saving for years trying to hit that 20% number while home prices keep going up. By the time they hit their savings goal, the home they want costs more. They would have been better off by buying a home with a lower down payment. Now, 20% down does have its advantages. It eliminates mortgage insurance and gives you a lower monthly payment. But it's a choice, not a requirement. And for a lot of buyers, waiting is more expensive. Mistake number 3 is going directly to a bank for the mortgage without comparing options first. And I say this not to sell you on using me specifically, but because the math is clear. When you go to the bank, you get the bank's rates, the bank's programs, and the bank's guidelines. They cannot shop for you. They work for the bank. As an independent mortgage broker, I work with dozens of lenders. I submit your file and they compete for your business. That competition is what gets you a better rate and better terms. Banks also have stricter guidelines. If you're self-employed, have a non-traditional income, or your situation isn't cookie cutter, a broker has access to programs that banks simply can't offer. Mistake number 4 catches almost every first-time home buyer off guard. You get pre-approved for a certain amount and you start shopping at that price. But your pre-approval amount is the maximum the lender will give you. It's not your budget. Lenders calculate your maximum approval based on your income, debts, and credit, but they don't know what your life costs. They don't know about your monthly expenses, your savings goals, or the lifestyle you want to protect. I always ask my clients one question before we look at numbers. What monthly payment feels comfortable for you? Not what you qualify for, what feels right for your life. Because buying at your maximum approval can leave you house rich and cash poor, and that stress follows you into the home you were supposed to love. Your comfort payment should support your life, not limit it. And mistake number 5, this is the one that costs people the most and almost nobody talks about it: not knowing your break-even point. Whether you're refinancing or buying, there's a moment where your upfront costs are covered by your monthly savings. That is your break-even point, and it's the most important number in the entire mortgage decision. If you refinance, your break-even is 18 months, and you plan to stay in the home for 10 years, refinancing makes complete sense. If you're planning to move in a year, then it doesn't. The math is that simple. Most people make mortgage decisions based on rate alone. The rate matters, but it's not the whole picture. What matters is how long it takes to recover what you spend and how long you plan to stay. That calculation takes about 15 minutes with the right information. And it can save you from making a very expensive mistake in either direction, whether that's refinancing when you shouldn't or not refinancing when you absolutely should. Those are the 5 biggest mortgage mistakes I see Arizona homeowners making right now. And the good news is that all 5 of them are completely avoidable with the right information. I'm Mike Kenji, your mortgage mentor in Arizona and Indiana. I've been doing this for 14 years and helped over 1,000 families make smarter mortgage decisions. If you have any questions about your specific situation, the link to book a free call with me is in the description below. No pressure, no obligation, just clarity. And if this video helped you, subscribe and I'll see you next week.